Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, May 10th, 2018. And in this video, I wanted to cover some of the sectors, commodities, things that stand out to me as some of the better, more attractive trading ops right now. You know, broad market remains locked in that large sideways trading range, but here's a couple things that I'm focused on right now where we might have some potential trading ops in the coming days to weeks. Starting out, now I'm going to cover the US dollar, the euro, and gold, as well as GDX. I did a pretty extensive front page post, so this is just a quick recap. Therefore, I'm going to run through these charts pretty quickly. You can reference that post on the site. It was made this morning and started out. I mentioned this, actually mentioned this setup in the trading room last night. This chart is the US dollar index futures 60-minute chart. If I don't clarify, you can see up in the upper left-hand corner here. This is a time frame 60-minute chart, and here's what we're looking at. What stands out to me is we had this divergent high. These lines are hard to see. I have the setting on this chart right now. The colors are kind of dark. But what I'm looking at, there's a negative divergence that we had, and here's a price channel. So this is a price channel. The dollar index has been walking up. We had this trend line at first, and then we started to roll over. We didn't have a hard sell once we broke that trend line. Instead, as I said, we continued to work our way higher with clear negative divergence. And when I posted this earlier today, we had broken down, and you can, if you reference that post, I should have made a clear mention. The first and most significant support level I was looking at was this 92.42 level. That was a white line on that chart. You can see as we zoom in, we hit that level almost to the penny in reverse. So, I was expecting, or at least the odds for reaction are good there. Now, where I'm going with this, it's even a better time right now than that post this morning, I think, to initiate or add to a position in GDX or gold, because we hit support, and as is so often the case, what I like to say is the initial tag of support from above often produces a reaction. So we had that reaction. You can see almost to the button. We came down, hit that level, reverse, and then a perfect back test of that trend line from below, that price channel. And so far, we're rolling down below it. So trading 101, it doesn't get much better than that. I cannot promise that the dollar is not going to go any higher or get back in that channel, or that these divergences will play out. But I can tell you the two most objective times to short the dollar or go long gold. And of course, gold, rallied on that move down, pulled back a little, and pulled back on on that bounce in the dollar. But these are the two most objective times to short, when you see a pattern like this, either on the breakdown or on a back test. And you can have your stop somewhat above. I didn't make mention, and if I didn't make mention in the video, in the post this morning, there is a very clear and direct inverse, or I should say, an inverse relationship between gold and the U.S. dollar, meaning when the dollar falls, gold goes up, and vice versa. The logic behind it is simple. When the dollar falls, it takes more dollars to buy an ounce of gold. It's really, that simple. Now, as I often say, relationships, whether they're direct or inverse relationships, meaning one goes up, the other goes down, on any asset classes, there are periods of temporary disconnects. One good example is oil. Crude oil lately, the dollar has been rallying strong, has a strong rally in recent months, yet crude oil was also going up. Crude oil around the world is priced in US dollars. That's the base currency for crude being traded, not just in the States, but everywhere. And therefore, usually when the dollar drops, crude goes up, but that wasn't the case recently. So there's one example. And therefore, I wanted to point out that sometimes I can get the call on the dollar right, and it doesn't translate into rallying gold, although this time the charts align, so I think we'll get both. Either way, that's the 60-minute chart. When we look at the daily chart of the US dollar index, you can see, let me go back a little bit in time here, and you can see this white line that levels at 92.42, the white line right here. A very significant support level, in my opinion. We're going back a couple of years here. This is 2015 right here. See that reaction low? There's a reaction. We had an intraday spike, but we closed right back on it right there. That's where the candlestick body is. We had a reaction there from above. We'll zoom in a little bit, and you can see once that support level was broken, when support is broken, it then becomes resistance. So you can see we failed there on the back test. We had a near test of it there, perfect test of that line there. support broke and a perfect test there. Now, you might say, well, Randy, we're above that level. That's support, and we've taken out support. That's bullish. I would have to argue with that. You guys, if you followed me for a while, you've heard me use this term. It's a made-up term I have. I don't know, maybe somebody else out there uses it. I call it a momentum-fueled overshoot. And from my experience, when you have any security, commodity, stock, a lot of strong momentum, upward velocity heading into a resistance level, you often, in fact, more often than not, you tend to overshoot that resistance level due to the momentum. I use the examples like trying to, imagine a pitcher throwing you a 90-mile-an-hour fastball and you're catching it with not even a catcher's mitt, a regular glove. It's going to hit that pocket. Your glove's going to snap back and then back forward again. Same story. There's a lot of momentum coming in here, and you overshoot it. Just, like for example, we overshot there. That was support. We overshot it a little and then got back above it, and then it acted as support. And so therefore, that's my expectation, that this is a momentum-fueled overshoot, some additional supporting evidence that the dollar is likely to correct. We're at, I don't know if you can make out the white line there. We've rolled off the high levels. We're still extremely overbought, about 73.5 on the RSI. Anything 70 or above, which is this red line right here, is considered overbought. The green line, 30 or below, is oversold. So when we go back in time, and I'll do this without any exceptions, let's roll back a couple years here. I'm going to circle the overbought readings over the last several years, which is right now the most overbought we've been. We just barely kissed the 70 level. So I'm going to show you. We're going to box in what happened. Go back here. This was the most overbought we had been since this current reading, and that put a major top in the dollar. Just before that, we became overbought, and although that didn't mark the high, it certainly marked a very powerful correction. This is really all I'm looking for now. I don't think we're going to have a major top in the dollar, but I'm looking for something like this with a resumption of the uptrend soon. So, all right, we'll go back a little bit further. I meant to use my box tool there. We were oversold. The numbers are blocking it, but we did hit the oversold level on the RSI, topped out there. So as you can see, without exception, I didn't miss any. These fell shy. Every single time we were overbought on the dollar, it was followed by a correction ranging from, a decent correction to an actual, larger trend change in this case and in this case, and pretty much in that case. So we'll see. History may or may not repeat itself, but that's what I'm looking at. So the main things are the dollar at or just a hair above resistance, but those 60-minute charts indicate a pullback, and if we get that pullback, that'll take us back below that level. So targets, I don't want to give them to you right now because I haven't really studied that much. At this point in time, I'm looking for just a swing trade op on gold and GDX, and I'll get to those levels in a second. Maybe we come back, test the top of that range, possibly, but I also have some pretty decent support there. Either way, even that much of a pullback in the dollar index would give us a nice pop in gold. So let's look at those charts. Before we do, actually, let's go to the euro US dollar. I made mention, I've had these levels here for months, actually, I think even before, or at least the beginning of the year. This is a support zone, these two lines here. And so I will zoom in a little bit. I made mention yesterday that the dollar or euro US dollar pair, which you're basically looking at a chart of the dollar in reverse because this is the euro versus the dollar. So this shows you the euro was falling as the dollar was rallying against it, or it was falling against the dollar. And so when this goes up, this chart goes up, it means the dollar is going down. The euro's rising and the dollar's falling. So point being, we're at support pretty well. A lot of reactions in this level when I go back in time. That's why I had those lines there. We are extremely oversold, as you can see here on the euro US dollar pair. And the euro, by the way, is by far the largest component, makes up over half of the US dollar index. That's why I put so much focus on the euro. The last time we were this oversold on, or even oversold at all, you can see these didn't even hit the oversold level right up here. And that was right before the bottom, this major trend, this major rally in the euro. Again, I'm not looking for that move now, even though we are deeply oversold. Could it happen? Sure. I mean, we could go on, back test this trend line. There's a lot of upside, but I'm looking for a bounce to last at least a few days, most likely a couple weeks, and maybe beyond that. So that should translate into a nice pop for gold and GDX. Here's gold. Again, this chart was posted on the front page today. Bigger picture is this trading range. Just like the stock market, we've been in a sideways trading range throughout 2018. This is the beginning of the year right here. You can see the dates down below. Here's January. So we started the year, and then boom, gold got locked in a sideways trading range. And, there's a couple ways to trade a trading range. You can stand aside if you're a long-term trader because you're going to be frustrated. You're going to up, down, up, down, up, down. Ultimately, this is going to break one way or the other. But a swing trader can simply, position long at or even when you get close to the bottom of the trading range at subjective longs and you sell at the top. Now, given back here, you didn't know there was going to be a trading range, but once you started to see it form, at this point, it was pretty clear. Right now we're at the bottom of the trading range. Now I can't promise we go up to the top or anywhere close to it, but I can tell you it's certainly objective. And this is where we went long about a week or two ago. GLD or GDX was added as an official trade when gold was at the bottom of this range, and gold has started to move up, which shows that we defended that support. And not only is the bottom of this trading range just support over in 2018, but more importantly, and I've gone over this in the past, there are a lot of reactions to the left of the chart around on or around that level that really make this a significant support level for gold. There's a big gap, so therefore this is that 123.25ish level is a very very solid level, and that's all trading is. You can't know for certain where something's going, but you can certainly wait patiently for objective times to go long. And when you go long on a pullback to a well-defined support level, when you can make a case for a pullback in the dollar, to me, it doesn't get any better than that. Can't promise it'll play out, but I can promise you this is objective. So you can see the PPO is starting to turn up here. I like that as well. You can see right there, PPO is starting to curl up, make a bullish cross. So, I could easily see gold coming back up, near or all the way to the top of this range, and sooner or later it's going to break one way or the other. Trading ranges are a period of consolidation. They act like coiled springs, so they can go on for a while, but sooner or later we'll see a breakout, and then gold will start trending one way or the other. Moving on to GDX, there's the uptrend line GDX is in right now. It's an official trade, so you can just visit the site. If you're not familiar, when you go to the right side of the chart, there's several ways to pull up the analysis on GDX. On the front page, on the right side, you can use that select ticker box, type in GDX, type it in if you're on a PC fairly quickly, and it'll populate GDX. Otherwise, if you type real slow, it's going to bring you down to the G's, and then you scroll down either way. Or any post related to GDX, underneath it, you will have the tag GDX or any symbols that were discussed, like GLD. You click on the GDX tag, and that will pull up all the posts on GDX. So, but there's your targets right there, and we're close to that first target now. You can see we're coming up on it. T1 it's 23.14. We're at 22.94 right now. I can tell you this, that I'll be holding out for more. We might get a reaction off that level, but at this point in time, I'm leaning towards this T3 up here at 24.81 as my minimum target. There's a potential target there. And again, we'll just have to see how the charts develop going forward. I just, at this point in time, I'm just looking for a pullback in the dollar, not a major trend change. But if the charts start to develop and tell me otherwise, we look for, and it looks like the dollar's headed much lower or gold's headed much higher for whatever reason. Here's a very significant level up here, 25.60 give or take. A lot of reactions there and to the left, and that could be a longer term target. And then more importantly, if we break above that, that would have very bullish implications. But on the flip side, this is a very significant support level here around 21.12. And so a downside break of that level, here's a minor uptrend line as well on GDX, but a downside break of that level would be bearish. So until then, bigger picture is, and we've been in a large sideways trading range. We've had swing trades on GDX since then. So it's a swing trader's market, but not an investor's market since 2017. So we're talking almost a year and a half now of sideways action in gold. So long-term investors have spun their wheels and gone nowhere. But swing traders, and that's what we're attempting to do now, capture these rips and dips, long and short, and try to sidestep these sideways trading ranges. So there it is. And I think at the time, if I'm not mistaken, I pointed out GDX as an objective long entry here at the bottom of that support level, that trading range as well, and it's up quite a bit. But that was an unofficial trade, if I'm not mistaken. I'm going to jump back and then we'll get away from the dollar and gold and all that stuff. I'd be remiss not to point out this. I did post this chart on the front page post this morning. This is a 60-minute chart of the euro US dollar pair. Very well defined downtrend line you can see there and a breakout. And, not coincidentally, broke out along with the dollars breaking down. But there's that breakout. And again, so we had a breakout, ran into my first target resistance level. I believe that was, that all these levels would have been on that chart this morning, and now we pulled back to support. So again, this is, I think, a great time to add. We broke out. It was impulsive. They sold the initial breakout, but we pulled back to support. Maybe we go a little lower. We can back test the trend line, but I still think we're coming up to at least this level. It's hard to make out probably on the video. That's almost a 120 level. The dollar currencies trade out to the fifth decimal. So it's about 120 or so. And there's certainly the potential for more than that. I could add another line right here, a little resistance, or some resistance there. But anyways, looks good right now. And that divergence right here that we had, bullish divergence at the lows, helps to confirm that trend reversal. Okay, I told you, will be all over the place with different, commodities and different asset classes here. These are lumber futures. This is a 60-minute chart. I'm waiting. I told you wood may be an official trade idea soon. Don't believe I've already added that one. Watching lumber futures, you can see a very well-defined trend line. Lumber has been climbing a lot. When Trump recently put on all those tariffs, one of those was on Canadian soft lumber. I believe that's what they refer to. And of course, that caused lumber prices to go up. But it's already starting to permeate into, the supply dynamics, the housing market and everything else relies heavily on lumber prices. With these lumber prices shooting up, it takes a while, but that's going to slow down construction. Cost of lumber goes up, the cost of construction goes up. And I mean, Trump's all over the place with everything. If he were to, remove that ban, you would see lumber prices, in my opinion, collapse. But either way, forget about what may or may not happen. What I can tell you definitively is there's a very well-defined trend line right there, and it's taken the shape now of a rising wedge. We have negative divergence on all these momentum indicators below: MACD, PPO, MACD, RSI. So watch for a break of that trend line. And again, this is a 60-minute chart of lumber futures, and I know a lot of you don't trade futures, so wood would be a trading proxy. It's not a direct play on lumber futures. This ETF, as well as its counterpart CUT, they hold companies that are engaged in the timber and forestry industry. Obviously, their bottom line is affected by lumber prices the same way that gold mining stocks, their bottom line is affected by the price of gold. But you had this divergent high. It's still working its way up because lumber prices haven't rolled over yet. But so far, this is lagging. Lumber prices have made a new high while wood hasn't. Either way, a lot of potential. Once this trend reverses, there's negative divergence. There's some support levels and potential targets, and most importantly, this primary uptrend line to watch. So again, that's a setup right now, not an actionable trade idea, whereas gold and GDX is a more, in my opinion, an actionable trade idea at this point in time. Quick update on crude oil. Again, crude, despite a rising dollar in recent months, has also rallied, showing a strong bid beneath it. But technically speaking, and this is a 60-minute chart of crude futures, you can see these long-standing divergences. The divergences have steepened on this most recent advance. What I'm referring to there, you look at how the PPO and the RSI, or the divergence, is a little steeper than it was leading up to this high right here, in which we did have that correction the other day, pretty sharp pullback. Now, from that point to that point, there's even steeper divergence. So crude starting to roll over. The recent DWT trade was stopped out, but it's on watch for another potential short entry. We just have to get, we need a little more evidence, because the momentum in this crude trade has been very strong. I don't want to say it's completely defied technicals, because we had a pullback there, but they bought up that correction pretty impulsively. So it's just one that I'm watching right now. And if you are, I know some of you guys, yeah, obviously a lot of you, you do your own trades. I'm just sharing my thoughts, what I think and what I see, and sometimes what I may or may not be trading. But if you've shorted crude or you are short, it'd be nice to see it stay underneath that recent high around 72 and continue down lower. So you maybe put a stop too much above there. If we go a lot above there, we're going to take out these divergences. Again, that's a 60-minute chart. Bigger picture, for you traders, USO or ETF traders. USO is one of the more popular ETFs. There it is. You can see we still have divergence, although the momentum indicators turned up recently. So we had confirmed divergence there, or right there, or somewhere around there. But then the indicators turned back up and made another thrust higher, and they're pointed up right now. We need a bearish cross. We need to see some better, some convincing evidence of reversal, some big red candle or some other type of candlestick topping pattern really come back down below this recent trading range here as well. That's one thing I'm watching for, referring to this level right here. And then, of course, a break of this primary uptrend line would send us down to possibly all the way down here back to 1166 to try to quantify it for you on USO. If we got that low, that would be about an 18% drop in crude oil, which would also set up a tremendous shorting op for things like XOP. You can see it back testing this trend line right now. There's XLE, XCS, other ETFs, or any individual crude stocks that have gotten way ahead of themselves. Okay, to wrap this video, we'll just look at a few of the commodity ETNs that look okay right now. This one, that's an official trade. Yeah, there's my targets. Official trade idea. And, it started to gain some traction early on, broke out of the wedge, impulsive. Everything looked good, but it's come back. It looks like it wants to back test that wedge, but it's still well above the stop. And I still like it. We had a divergent low at the recent lows. Coffee is one of the few, commodity ETNs that haven't, or commodities period, that really hasn't taken off yet. And so far in 2018, commodities have outperformed the broad market by a good amount. We're seeing money start to go back into commodities, and so either way, this looks good now. Maybe a possible back test. And I still, unless it takes out the stop, it's an active trade, and this is maybe just the first counter trend rally in another uptrend, which is hopefully soon to resume. But there's the target, so I wanted to update that for those of you in it. And the other one we recently had just barely clipped. Here's the stop, 35.38. Barely had our stop clipped right here. We shorted it here. It went on to almost hit the first target. I still like it. I still think this is, by the way, I'm sorry, NIB is the cocoa ETN, cocoa prices. So far we've come back down. If you're still in this one, if you gave it a little more room, we came close to that first target. I had it set just a hair too low, because you can see we reversed just above it. The low that day was 32.43 versus my first target of 32.35, so we missed it by 8 cents. Little reaction so far, but I think this one continues lower down here to that 30-ish level right there at least. And so there's a commodity I'm actually, an ag commodity that I'm bearish on. So that's one reason I usually don't go with the broad-based commodity ETNs, because within the realm of commodities, there's no correlation. In fact, some have inverse correlations. Like I've talked about, you have COWFF, which is cattle. That didn't work. COWTF. There it is. And this one's bounced back to resistance and could pull back here. So that's a potential trading op, although I'm not adding it. My confidence isn't high enough right now, but I just wanted to point that out. I'd have to check the futures chart. But that one looks to be, at a pretty well-defined resistance level. And of course, JJGTF, they changed the tickers on a lot of these ETNs lately. Yeah, iPath did, and I think one other company. But this is comprised of wheat, soybeans, and corn. Actually, in the order, I believe it's wheat, corn, and then soybeans, if I'm not mistaken, somewhere around there in that order. You can see it's done well. We had this as an official trade earlier this year, hit the final target, but now we have a divergent high. So I think the grains have gotten ahead of themselves a little bit. We have negative divergence there. So if you're long the grains, any wheat, corn, or soybeans, or this ETN JJGTF. It used to be just JJG when our last official trade idea on it. Looks like a bearish rising wedge. Maybe it wants a wedge higher. I'm not going to add that. I certainly have no desire to add this as a short. I'm still, overall mostly bullish on commodities for 2018, but just wanted to mention that it might have run its course here, and we'll just look at its components here via their ETNs. There's wheat. That must have been an unofficial trade idea earlier. We hit that second target, 690, and we put in a divergent high there, and we've been reversing so far. You can see the negative divergence. So there's wheat. Looks like the initial run, at least for the time being, is over. And corn, same story. I don't have it drawn out here, but you can see negative divergence right there. The PPO and the RSI against prices making a higher high right up to that resistance level I have there at 1850. You can see it acted as support back here, and it acted as resistance when we hit it there. So the charts are working well on these. Now, over time, maybe a little correction and a little more downside, but I think we work our way up here to this $20 area. But right now, if I had to pick one or the other, I'd rather be short than long, but I do not have, I just want to make clear I am not shorting wheat at this time. There's cane, one of the sugar ETNs. That one was stopped out recently. Still on watch. SSGFF used to be the former sugar ETF. Maybe it's SGGFF. Trying to go from memory there. Okay, there it is. Downtrend line, divergent low. So sugar looks ready to pop soon. So it's still on my radar for potential trade idea. Just needs a little work. We need some evidence because this one's in a downtrend. No reason to try to catch a falling knife until we see evidence, at least some decent evidence of a reversal. And yeah, I think that's it. All right, so those are some of the things that stand out right now. Not all inclusive, but mostly commodities that I'm looking at now. And as always, if you guys have any questions, just drop me a line in the trading room. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.